Vikas, can you put everybody on a mute? Thanks. Uh, Good afternoon, everyone, and a very warm welcome to all of you for today's session. It is indeed encouraging to note that our knowledge session series focused on tax and regulatory issues has been received so well by our members. Last month, we started with a session on GST, and today we are again here with something to offer on issues related to customs, exempt procedures, and incentives. I must express our sincere gratitude to Ernst& Young India, who have partnered with our council in this initiative as knowledge providers. For today's session, we once again have with us Mr. Kunal Chaudhary, partner, and Ms. Akanksha Jain, director from the indirect tax team of EY India, and they will be sharing with us latest developments in the areas concerning today's topic. Let me brief you about Kunal. Mr. Kunal Chaudhary is partner Ernst& Young India, handling indirect tax practice. A qualified chartered accountant, he carries more than 16 years of experience in tax consulting. During his over 16 years of experience, Ms. Chaudhary has been actively advising several companies in the telecom, electronics and hardware, IT, ITS, e-commerce, and technology industry on host of indirect tax issues, including customs, excise, service tax, VAT, CST implication to anti-dumping proceedings and GST, etc. He is also core member of EY team advising fast track task force set up by the MITI on re-establishing handset manufacturing and component ecosystem in India. A very warm welcome to you, Kunal. We have another senior panelist with us, Akanksha Jain. Ms. Akanksha Jain is a senior manager with Ernst& Young India's indirect tax practice, having been associated with EY since 2011. Akanksha is a qualified chartered accountant and has more than 11 years of experience in tax consulting. She has been engaged in providing advisory and compliance services to various companies uh, in different domains, including electronics hardware, IT, ITS, e-commerce, and technology industries under the indirect tax regime, including foreign tax, customs, excise, service tax, VAT, CST, GST, etc. Let me take this opportunity to also mention that our partnership with EY India is set to grow, and we will soon be joining hands for some new initiatives also for the benefit of our industry and our membership. With these words, I would like to request Mr. Sandeep Narula, Chairman ESC, to formally welcome all the delegates and to carry the meeting forward. Over to you, sir. Mr. Sandeep Narula.
Thank you, Mr. Gurmeet. You had a very good introduction for our panelists today. We have with us Mr. Veer Sagar, Vice Chairman ESC, Mr. Kunal Chaudhary, Partner EY, Ms. Akansha Jain, Director EY India, of course, Mr. Gurmeet Singh, ED ESC, and my colleagues from the Council, ladies and gentlemen, very good afternoon, Namaskar. As always, true pleasure to welcome you all in one of the session of today's, which is second in series of the knowledge sessions. Those have been initiated with along with partnership with EY. In fact, we had last month also one session which was very largely appreciated and attended. The aim of this session is to empower our members by sharing the intricacies of the regulatory requirements that are in place today and to have a system in terms of compliances. I would also give a special word of welcome to our friend from EY, Mr. Kunal and Ms. Shalini, who are actually have large experience and would make us aware of the regulations that are in place and we need to comply while doing the export of goods and services. In fact, let me take you back to the recent development. Those who have not been keeping pulse, recently we had a very ambitious and forward-looking target in terms of exports from originating from India, and the government has set the target of $400 billion worth of exports in the financial year 21-22. In fact, the focus on this target is such that Prime Minister himself came onto the session, of course, virtual, wherein the stakeholders from entire country, right from the district level, officers, exporters, district councils, state councils, export promotion councils, ministry officials, and all the foreign missions who are located in the world were together. The whole objective of the session was to have a very cohesive, coordinated approach on how to reach the $400 billion. And I must say that this $400 billion target is a very corporate style working, where they have not only given an isolated figure of $400 billion, but they have gone to the level of what commodity, what target market, and what is the past progress on the export. So many factors were considered and deliberated, and that is how we reached, and the government reached the target of $400 billion for 21-22. Looks to be very ambitious, especially when we see from the perspective that we stand at about 200 some billion dollars in 21, and from here we have to travel a long journey and reach $400 billion. But I must say that when we have the positive approach and we have the capability, we are sure to reach not only $400 billion, rather I'm very hopeful personally that we would probably cross that figure. But how do we do that is something which needs to be deliberated and which is being done. So when we do the export, as I said, export is not a pure sales activities. There are some associated issues which are along with the export, especially related to procedures and the formalities. Of course, the intricacies are there. So we need to understand the procedures, especially in view of the recent amendments, recent changes that have been taken by the government. So that is how we thought that having a target is one thing, and then how to empower our member in terms of business promotion, how to empower our member as far as the knowledge is concerned. And that is why we brought a very talented team of speakers today who would highlight various issues concerning customs, of course, the related complications of the incentives which have been announced recently, the soft tax filing, if you talk of our software companies, export import procedures, duty drawback schemes, and finally issues related to GST. As we all know, custom is one of the oldest tax we have been going through, and in the recent time we have seen a lot of improvement in the way customs in India work. I remember the time when the custom shipment used to come and we used to have a CHAR, we used to have an agent, and then work on and then think on ways and means how to get the custom clearance done and shipment released. Gone are the times. Today, the system is such that we have to file the bill of entry in a given time. If we do not do it, we have to pay a penalty at the rate of 5,000 rupees, that which goes double 10,000. And the system on the back end is also very controlled. It is not obligatory on our part to do it, but it is also on the part of the government machinery officers to make sure that the customs consignments are released, bill of entries are cleared in a timely manner, and in case they do not do, there is a system of developed by them to how to ensure it. So overall ecosystem for the import and export has largely changed. And when we change, we also have various laws. And as said, ignorance of law is no excuse. So we need to get on to awareness mode, especially when we have a large target and large business opportunity coming our way. So we need to look at the ways and means to comply with this. Having said so, I would also touch upon one critical issue which a lot of our members have been raising on soft tax filing. In fact, in one of the recent interaction with the Honorable CIM, Mr. Piyush Goyal, we raised the issue of soft tax, that if it is a burden on to us to do the filing, and can it be removed or can it be simplified? So we have also proposed a mechanism where some study group is formed, and the whole system is revisited and seen from various angles, because there was a apprehension, there was a concern that whether money laundering can take place if there is no system. So such things would need a study, and but till the time we have the soft tax filing in place, we need to be prepared, we need to be aware. So I hope today's session would empower us on that line. Apart from that, we also have a ROTEP announced, which has come in replacement of MEIS. ROTEP rate for our industry is at 0.8%. So, along with the announcement of the new incentive scheme, we also have the new mechanism to get that benefit. So, that will also be explained by our very capable and able team today. And finally, I think GST is one area where even the authorities are learning, and of course the industry is learning. We often see a lot of amendments taking shape, coming up, a lot of new notifications coming up. So we need to keep pace with those amendments in the laws, and we need to have somebody who's the subject expert, who can guide us, who can make us aware and how to comply with those requirements in order to be ready and in order to be safe in our business. Finally, before I end, a few words about our organization. As we all know, ESC is India's premier export promotion organization, serving electronics, software export services since 1986. If we go back, we started with a mere few $1 million of export. Today, our export from the ESC Council stand at hopping $160 billion. With 2,300 members, ESC is part of the growth that India has seen in the ICT journey right from the beginning. Council is very actively involved in and has been taking various initiatives, not only business promotion. In fact, we have been empowering our member in various domains. We have gone far ahead. Even funding issues, we are trying to build on and support our members. So we have recently signed the MOU with ESC also. So initiative that has been taken along with the EY team is also to empower our member. And I assure you that we will keep on taking many, many more initiatives in order to have our export dream fulfilled. And especially for the electronic industry, I assure you that we have a long, long journey. Out of $400 billion, to you, I'm just mentioning electronic hardware has got a 16 billion share, which was $11 billion in the previous year. But I hope that we have the potential to further multiply it 3 times, 2 times in couple of years from now, provided we have a very synchronized process. We are lucky and fortunate to have a very good positive government. As industry, we are all the more we got all the more into, and as council, we are there to serve you. I assure you, you give the idea and we will find it worth and we will get it going. So with these words, I won't take much of the time. I would request Mr. Kunal Chaudhary and Ms. Akansha Jain to make their presentation. And after the presentation, we can have a discussion session. And I would urge my members, my colleagues, my friends from the industry to have their queries, and we would answer. I mean, I would request the speakers to answer the queries.
Thanks. Thanks ESC for giving us this platform. I think today, we are trying to cover, a lot of issues. As rightly pointed out, customs has come, a long way. The customs and foreign trade policy, what it was even 5 years back, there has been a sea change in how things are done now. A lot of automation has happened. Face test assessments have started. A lot of things which are underway, a lot of platforms the government is trying to create. So the entire landscape, if we say, it has changed in the last 5 to 10 years. From a customs foreign trade policy perspective. What is also very critical, for our industry perspective, is that for the IT electronic sector, the complete regime has undergone a change from a customs perspective. And why it has gone a change is because I think this is a sector one. Obviously, it's a sunrise sector. This is a sector which the government feels has the maximum capacity to increase exports from India. They want to focus maximum on this sector, and they feel that India has a lot of potential to obviously satisfy the domestic need, and also to have to increase exports. So when more and more critical for our sector, customs and other procedures have undergone a sea change. There are a lot of change, and they have become more and more important. Earlier, 6-7 years back, everything was zero for our sector. So customs was not a very, very important area for anybody, because any imports was a 0%. Now with the changes, with the phased manufacturing plan which the government has brought in for various products, it is planning to do it for more and more products in India. There is going to be there is a very, very high scrutiny on customs side. A lot of investigations, with GST being carved out, the CBIC officers, a lot of them are focusing on customs, more manpower being devoted to customs, which mean more investigations, more questioning. So there is a very big focus on customs of the government, because it's also a very big revenue generator for them. So I think we will try and cover some of the key issues. Then we will also try and cover various measures which government has tried to do. We will cover a concept called a bonded warehouse, which which used to exist since a long time. But however, to promote exports from India, government did a lot of flexibility in that mechanism. And with that, it's become a very, very lucrative scheme. So we are going to discuss that as well in detail. And at the end, you would have seen a lot of newspaper clippings around GST investigations being carried out by authorities. So we will also cover some areas, where we are seeing focus by the authorities on the issues which they are trying, or they're finding out in various investigations which they are doing. So, overall, though there is a lot of content, we will try and cover it, and, and try and answer your questions at the end of the session. Over to you, Kansha.
Kansha, you are muted.
Kansha, we are not able to hear you.
Hello, everyone. A very warm welcome and good afternoon to all. Today in this session, we have tried to divide our presentation into 3 sections. So one in the first section, we'll be covering exim procedures, wherein we'll be discussing about what are the key issues or points of consideration which we as an exporter or importer should be mindful of. Another aspect which we'll be covering in this section would be on the soft tax, which even Mr. Sandeep was talking about. And the third point which we'll be covering in the first section would be the custom bonded warehouse scheme. The second section is more about what kind of export-import incentives or benefit which government has come out with over the period of time, with a major focus on the recently introduced the ROTTEP and the erstwhile drawback schemes. And also we'll touch upon on various issues or problem areas or considerations which we as a member, as an exporter, should be mindful of. And the last section would be devoted towards the GST audit and investigation, that what all areas is something which department whenever come is majorly focused on out of our experience, out of whatever is there in the news, what we heard from the department, and how to tackle that thing out whenever we have any audits. Moving on in this, the key point for consideration, we have divided into 3 sections. So the first and foremost things which we have to consider is from pre-import or export side is that currently, to make it more SSE friendly and to make it faceless or a digitized economy, one of the initiatives which government has done is that each and every exporter and importer has to take an IC code. Now, what government has also come out is that with the requirement to periodically update this IC, and accordingly, if that updation is not being done, then the IC has been blocked for the SSEs. So hence it is of paramount importance that we as an exporter or importer do keep our IC updated at all times within the prescribed timeline, so as to ensure that we do not face any problems at the custom whenever we are exporting or importing. Another aspect which we should be mindful of whenever we are going for any export or import is to ensure that if there are any restrictions, export restriction or import restriction, we should try to get the certificates or a registration done from the respective authorities. Like in telecom equipment, you have WPC licenses, which has to be obtained if we are importing any equipment in India. So all these kind of licenses of important, which we should be mindful of whenever we are importing or exporting any products in or outside India. Another aspect is that there are various benefits which the government has provided under foreign trade policy for exporters, provided we are also registered with the respective export councils and RCMCs. So hence it is also important that we do get registration from those agencies on time before we file for those benefits under the FTB scheme. For example, if we are into technical engineering services, for service industry, there's an SEI scheme. So one of the important prerequisite is that we should be registered with some export promotion councils before applying for an SEIS. Similarly, to have a broad spectrum and to more scrutinize, to have more free flow of information, what the government has done is that it has tried to link customs with GST wherever the things are flowing between both the two legislation. Like for example, if we are exporting goods outside India, in GST, we have to, whenever we are filing our returns, we have to mention about the shipping bill, details, the port of registration from where we have exported the goods. And all these details flows through and are mapped by the GST through the ICE gate. And in case of any mismatch, we have seen that many exporters at times face problems when they are claiming and going for a refund of input tax credit. Hence, it becomes very, very important that whenever we are filing any shipping bill or any return, GST return, we ensure that all the details and documents whichever we are mentioning therein are in sync. There's no mismatch between the two. Similarly, for this thing, it is also important, especially for the first time exporters, that whenever we go for a GST registration, we ensure that in the registration certificate, we do a linking of the IC code as well and ensure that we link the GST in against which we'll be exporting on the ICE gate as well. Because we have practically seen without this linkage, if we are going for an export and mentioning our GSTN, if the GSTN number is not updated on the GST portal and the ICE gate, the export cannot happen on that GSTN number. Also, one of the things which we should be mindful of is that if we are exporting without payment of taxes in goods or services, as a requirement under GST, we should always obtain a letter of undertaking, which is an online procedure on the GST portal, which anyone can go and apply for. But it's a prerequisite which has to be renewed every financial year and should be ensured that we have it in hand before we go for any exports without payment of taxes. Another aspects which we have seen have been an issue point or a pain point for importer or exporter in India have been that many a times we have seen that bill of entries have been filed with the help of a CHAs or custom house agents. The teams are different versus the teams who have been generating e-way bills from the client side. And there have been times when the details either are incomplete or a provisional bill of entry is considered for generating an e-way bill, that at the time, whenever the goods are moving from the custom port to the warehouses or to the customer place, there have been issues wherein the vehicles have been stopped, and due to the mismatch in the e-way bill details vis-a-vis bill of entries, the goods have been confiscated. So hence it becomes important that whenever we are doing any movement of goods from custom port to warehouse or vice versa, the details which we are mentioning on the e-way bill vis-a-vis other relevant documents like bill of entry, invoicing, etc. should match and are in sync. Similarly, as I was just talking about, that government has tried to ensure that there's a linkage between the ICE gate and the GST portal for exporters and importers. Hence, it becomes very, very important that whatever detail is flowing on the ICE gate, whether it is for import for credit purposes in GST or whether it is of export for GST refund purposes, that all those details, as we are filing for the custom purposes, should also match with the books of account vis-a-vis the GST return which you are filing, so as to ensure that there is no loss of credit or refund or delay in claiming refund in these cases. Similarly, there have been times wherein we have seen that at the time of filing bill of entry, sometimes we miss out on the exemptions, which might already be there at the time of import, but we fail to claim that out. So the very classic question comes in, how to tackle that out. So we might have paid 10% BCD, but because of the exemption might be 0 or a 5%. So there's a provision under customs law for an amendment, but obviously the amendment comes with the prerequisite that the conditions which results into an amendment should be pre-existing at the time of doing that import and filing the bill of entry. Hence, we should be mindful of that on practical level, we might face some challenges, but there have been jurisprudence on this account wherever there have been exemptions in place, but only have been missed to be filed. It should be considered at a later stage basis your discussion with the custom authorities. Hence, it becomes very, very important that whenever we are importing anything, we should at first do a thorough verification that what all pointers, what all exemptions are applicable to us on those imports basis the end user requirement, if any, are available under the custom relevant notifications. Similarly, it becomes very important, specifically for IT/ITES industry, that whenever we are exporting any goods or services, that we ensure that payments relating to that are not only duly intimated to the bank with the relevant export invoices which we have raised, but also that we try and push our customers to release the payments within the prescribed timeline as provided under the RBI and FEMA guidelines. This is of importance because in case of regular defaults or not realizing the exports on time, we have seen that in certain cases RBIs do push the exporters into a caution list, and in future then it becomes very difficult to obtain any bank guarantee in case of any shipments if you want to go to a bank and ask for it, or to obtain any FRA or any proof of an export from our bankers in case we move towards the caution list of the RBI banks. Similarly, although it's a self-assessment route, there's a thing that custom authorities do validate your shipments on a lesser way than what they have been doing in the past. But in case there have been incorrect disclosure in documentation, we have seen that there is a more detailed scrutiny and more verification than being done by the custom authorities, not only for that shipment, but also for the future shipments as well. Hence, it becomes of utmost important that whenever we are doing any documentation, filing any declarations, any bill of entry, any documentation, all the relevant documents and details are correctly and rightly mentioned therein, so as to avoid any kind of future issues or a litigation. Another aspects which has come onto picture over the period of time, especially under the customs, is that government has introduced a new rules of origin under trade agreement, which is CAROTA. That is Custom Administration Rules of Origin under Trade Agreement rules. This have been made effective from 21st of September 2020, with the main objective that the onus is on the importer to prove that the origin of that imported good is from those countries vis-a-vis the FTA has been entered and been used by the importer for claiming the BCD exemption or a nil rate of duty. Hence, it becomes of paramount importance that under these CAROTA rules, there's a form which has been prescribed, Form I, which requires the importer to have additional information from the sellers regarding the cost of production, the breakup, the value addition being done, the margins being applied, etc. All these details, so as to ensure that the origination of this good is from the actual exporting country and not from any other country. So the major issue which we have seen the clients been facing practically under the CAROTA are these new rules of origin, wherever the companies have been claiming concessional BCD exemption under the foreign trade policy, foreign trade agreements, or preferential rate, that the overseas suppliers have not been able to supply that much of an information or have shown resistance to supply those information to the importers. Hence, at the time of import, whenever we are filing these declarations under CAROTA or rules of origin to prove that these goods have actually originated from the goods of export, becomes a problematic issue whenever at the time of clearance with the authorities. So there are 2 points which I would suggest that we as a member, as an exporter or importer should be mindful of in this case, is that we should thoroughly go through that CAROTA rules. We should, rules of origin, if we are claiming any preferential rate, try to obtain the maximum information we get so as to furnish them at the first instance to the authorities after filing the bill of entry. Another aspect, another solution which we have seen people, if they have failed or not able to convince the officer, is that instead of going for the full assessment, the authorities opt for the provisional assessment. So that becomes an issue because for that, companies have to furnish a bank guarantee, which leads to unnecessary financial burden or a procedural issue. Similarly, recently there have been change in GST wherein the HSN requirement have been changed for 5 crore and above kind of a companies to from 4-digit GST into 6-digit GST. And as we are aware that in case of an export of goods, since for claiming refunds, the GST returns are getting mapped with the ICE gate, it becomes really, really important that whatever HSN we are mentioning in our shipping bills is akin to what we are mentioning in our GST returns and invoices, so as to avoid any kind of issues either at the time of export or claiming the refunds. Moving ahead with the next topic. Next topic is on SOFTEX, Software Export Declaration. So just to give you a brief about what SOFTEX is. So SOFTEX is one of the requirements under the RBI law, which requires a unit engaged in export of software, that is ITES, through data communication link to furnish a declaration within 30 days from the date of invoice to the STPI or FTZ or SEZ authorities for the certification as a proof that they have exported the goods, the software or ITES services outside India. Now the question comes in, are is the certification requirement only for those units which are into the STPI, FTZ or SCZ units? So the answer to that is no. As per the regulation, it is required to be filed by all those companies who are engaged in software and ITES exports. So irrespective whether the company is into STPI, FTZ, SEZ or a DTA, we have to file a Softex and have to ensure that it gets certified. Now, how to do that? For a DTA unit who are engaged in software export, there is a provision wherein we can go and apply as a non-STPI unit and approach the relevant STPI jurisdiction so that we can go to the STPI unit and file the Softex and get the certification done from those STPI, even being not an STPI unit. So a DTA company can get themselves registered as a non-STPI and get the Softex certified from the STPI authorities. This STPI, non-STPI registration is granted at first level for 3 years, and thereafter it needs to be renewed. So we should always ensure that when we are close to the expiry of that validity of registration, prior to the 3 months of that expiry, we should again go for the renewal. Also, it is important that before you go for a Softex submission, whatever our exports contracts are, we get them pre-registered with the STPI authorities from whoever we are claiming that on non-STPI registration. Apart from the Softex filing, as a part of this procedure, as a non-STPI unit, we also do some additional compliances, which is known as MPR and APR. And also there are some annual charges or service charges which are required to be paid to the STPI unit, depending the size or quantum of your exports vis-a-vis the export contracts. One of the important aspects which we have to be mindful of is that whenever we are going for Softex filing and MPR and APR filing, there's an additional requirement or additional information which we have to supply to the authorities apart from what we will be disclosing in our invoices, which is about the investment details in our project, the employment details, the type of software being exported, what are the contracts under which the exports have been made, so on and so forth, including the NFE requirement has to be reported in our MPR APR forms along with the Softex whenever we are filing with the STPI authorities. So what happens in a case, let's suppose if we fail to file the Softex within time. So there's a procedure under which we can go and file for a condonation with an RBI, wherein we can ask for a condonation and then can get our Softex regularized for the past period as well. There is also a penal provision which the RBI has provided under the FEMA Act, which extends up to penalty up to thrice the sum involved in the contravention. And also for any continuing default, if we do not file any Softex as a software export unit, then there is an additional penalty of 5,000 for every day if we continue doing that Softex non-filing default. Hence, it becomes very, very important that if we are into software or ITAS exports, we do get ourselves regularized, we do obtain these registration and start doing the Softex filing along with the MPR APR. One of the issues which gets associated with non-filing of Softex is that in these cases, the banks also are reluctant, or as per the RBI guidelines, they do not issue or they delay in issuance of the FIRA or a BRCs, which is proof of export realization. This becomes of importance because if we are going for a refund with the GST authorities, and if we are claiming and try to prove our realization of exports proof, in the absence of all these documents, there is an unnecessary delay or might be rejection on part of the GST authorities that they might not process our claims. Also, it is one of the things which we have to be mindful as a non-STPI registered units for software export is that in case wherever there is a export realization which is less than than what is mentioned in the soft text, we need to seek the RBI approval for getting it written off. Similarly, one of the considerations in MPR, APR, MPR is a monthly progress report filing and APR is an annual progress report filing, which we do. In MPR, one of the things is that if there are any credit notes which you have issued in a month, that does not get reflected in the MPR. So the solution to it, which we have told to our clients or which are generally practiced, is that all those credit notes, if we have issued to any customers, that should be reported in an APR in a as an invoice-wise level, so that the total export turnover for that financial year is being correctly depicted with the STP authorities. The last and foremost, one of the issues we have seen, and there is a CAG report also which came out in around September 2020. So there have been a review by the CAG on various issues wherein even the SEIs have been scrutinized. So there have been certain cases which they have found out from the Kerala authorities, wherein SEIs claim of worth of 14 CR and 17 CR and 16 CR respectively being passed for 3 entities. They come out with a finding that they have seen instances that in the declaration being filed with the SEIs before the DGFT, the nature of services were mentioned as a technical testing or an engineering services, and accordingly SEIs were being granted. But on further scrutiny, they found out that these entities have also filed the soft text against similar export invoices, but the description therein, what they have mentioned is as a software development activity. Hence, I'll just request our members and colleagues here that whenever you are filing the soft text or going for a benefit under FTP like SEIs, please try to ensure that whatever description you are mentioning or your invoices plus software should match. If it is an engineering services, if it is a marketing services, if it is something else. So the same should reflect in all your documentation. Otherwise, it leads to a denial of benefit which might be available to you. Moving on to another concept. So this is something which even Kunal was talking about in the starting. The government has come out with a manufacturing and other operations warehousing regulations 2019, which is very famously and commonly known as MOVER. So MOVER is a concept wherein government has allowed companies to do the manufacturing and other operations in a licensed private warehouses under section 58 and 65, wherein companies can go and file the application with the Principal Commissioner or Commissioner of Customs to take permission to have a license for private warehouses and also for undertaking manufacturing and other operations in this. So now what is the benefit if we go for a move? So one and the foremost important benefit which is there under the mover is that duty deferment in case of import of inputs and capital goods. So in case we are importing any goods into this custom on warehouse which is licensed under mover, we don't have to pay any custom duty at the upfront of import of our inputs or raw materials or the capital goods. Similarly, in this warehouse, any procurement from the DTA is also permissible. There is no limit to that. With the only caveat that obviously if we are importing or procuring from the DTA, the applicable GST has to be paid. Another aspect is that that in case of a mover, the custom mounted warehouse, there is no NFE requirement which we have to meet. Also, there is a single authority which have been dedicatedly working for the mover for licensing and maintaining or managing or controlling these regulations. So there's a single application and a single authority. So we don't have to run from here to there or to different authorities to get our compliances done, to get the registrations done, to do any other kind of filings or compliances under the mover scheme. Similarly, there's no foundation that those who are opting for the mover should only be exporting or they can't do a DTA sales. Or if they can do a DT sale, they can only do up to a certain specified percentage. So there is no limit set against this mover registration. The companies can go for either export, DTA, both, and there's no limit to what kind of a DTA turnover they can go from there. What happens in the mover, the advantage is that if we are undertaking a manufacturing in the mover private warehouse and we are doing a DTA clearances, the custom duty which we have not paid at the first instance of import should get deferred at the time of the domestic clearances. Hence, there is a working capital benefit which the companies can avail under this scheme. Some of the basic operational mechanism which I would just like to highlight under the mover is that there is an application which has to be filed for private bonded warehouse and manufacturing and other operations, wherein we have to spell out what are the other operations we should be doing under the mover. Similarly, imported goods can be deposited in the private warehouse by filing the bill of entry for warehousing purposes without payment of duty. Also, that clearance of goods can also be done for the home consumption or for exports. In case of an export, definitely there is no duty payment which has to be done. But in case of a DTA clearances, the custom duty which have been not paid at the first instance should be required to be paid. Some of the key pointers which is of importance that we should be mindful of when we are opting for this scheme is that we need to ensure and keep a separate registers or keep a record that how much of goods we have imported under mover without payment of duty, how much we are using against exports, and how much we are using against the DTA clearances. The segregation or this maintenance of report is important so as to ascertain the amount of quantum of duty, custom duty, which we have to pay due to the DTA clearances. Similarly, we have to ensure that in case the imported goods which we have cleared for home consumption after use in section 65, there is no depreciation which we can claim as a company on those imported goods. So, and it becomes important for us to see that whenever we are clearing any goods for home consumption, either we are doing it after use or before use. So that is one of the criteria which ought to be kept in mind when we are doing any record keeping or maintaining any data with us. Similarly, in case we are clearing a traded goods to a DTA beyond 90 days, there is an interest of 15% which also becomes payable for the company. So we should be mindful that whenever we are doing a DTA clearance, it should be within that prescribed time to avoid any interest implications. Moving on to another section, which is export import incentives. So here we'll be talking about the key FTP incentives or benefits or schemes which been since they're long for us to with us to avail benefit of. But what are the points of consideration which are the things we should be mindful of whenever we are opting for any of these benefits under the FTP schemes? So the four schemes which I'll be just touch basing upon in brief and then moving on towards what are things we should be mindful of is the EPCG, the advance authorization, the project import scheme, and the free trade agreements. So EPCG advance authorization, I'm sure that most of you would be aware of. EPCG is for claiming exemption on custom duty payable on import of capital goods, which have to be used in the subsequent exports to be made by the company. Whereas advance authorization license is claimed wherever we have to claim exemption on import of inputs to be used in the manufacture of exported items. One of the key conditions under both the schemes is definitely that imported goods or capital goods has to be used for the exported items. And also there is an export obligation which we need to submit at the time of applying for EPCG or advance authorization license, which has to be met within a year in case of EPCG and within 18 months in case of an advance authorization. Some of the points for consideration in case of EPCG and advance authorization is certain, which I would like to share with you guys is that in case of an EPCG, we need to ensure that trace that whatever export obligation we have to be meeting and try to submit it with the FTP, DGFT authorities later on as a part of the EPCG claim, we need to keep a separate record of those exports. So for example, a company is engaged into 4 kinds of an export and EPCG claim has been taken only for 1 kind of an export, or that single export is being done under EPCG, one without EPCG. So the records has to be clearly maintained as to this EPCG claim benefit against which which capital good vis-a-vis the shipping bills against which this benefit can be tagged along. Similarly, since in EPCG that benefit or export obligation is being counted over and above the average export obligation which a company has to meet. So there has to be classification of shipping bill which has to be maintained that these shipping bills are towards the average export obligation and the balance shipping bills are towards the specific export obligation which a company has to satisfy to claim the EPCG benefit. One of the procedural aspects which we have seen a company somehow missed to not undertake is that to filing of an installation certificate once this imported capital goods have been installed in the factory. Another aspect similar to EPCG is that even in case of an advance authorization, this becomes important that we keep a track of how much of export obligation we are doing towards advance authorization vis-a-vis the other benefits which we have claimed under FTP or we have not claimed. Similarly, we also ensure that in the shipping bills or in the advance authorization license, whatever description of goods which we have mentioned should be similarly, there should not be any mismatch in shipping bills vis-a-vis the advance authorization licenses which we have claimed. Also, in case we have opted for an advance authorization or EPCG, we have to be mindful that if we are going for an refund under the GST, there is a specific provision, specified rules and provisions prescribed, wherein the formula is different than the normal refund formula which we claim for a refund under the export of goods. Another scheme which is there is a project import scheme. It is basically applicable for those who are opting for a setting up of new industrial plant or expansion. And in this case, the major benefit which we have seen whenever companies have gone for is that there's a concession BCD across the imported goods of 5%. So it becomes of importance for us to analyze whether we want to go for advance authorization or project import scheme, depending on what is the quantum of imports we are doing, whether upfront exemption is available or not, or we are going for an expansion, or is it an existing activity which we are doing? Because if it's an existing activity we are doing, then obviously we can't go for a project import. But if it is for an expansion or for a new industrial plant and want to import some machinery, then obviously we can go for the project import scheme as well. So hence, in all these schemes, there are 3-4 factors which we should be mindful of, that we should be careful of that what kind of benefit we want to claim. Second, whether we will be able to meet the export obligations which are required to be maintained or met to claim this benefit. Third, definitely, that is there any existing exemption or benefit which we can otherwise avail without going into these procedural aspects of advance authorization, EPCG or project import scheme. The last and the fourth one under this benefit which have been provided by the government is the free trade agreements. So India has free trade agreement with various countries like Taiwan, Bangladesh, China, wherein depending on the nature of product and the terms and conditions provided therein, a concessional or a nil export duty or a basic custom duty exemption is being provided on import from these preferred nations. One of the things as we were talking about in the previous slide is that because of the introduction of the new rules of origin, that is Carota, so the onus is on the importer to prove that the goods have actually moved from the that particular exporting state from where for which India has signed that trade treaty. To give you an example, the goods might have originated from US. From US, they have moved to China, and then from China, it is moving to India. So in that case, if we want to claim the treaty benefit which we have with China or under ASEAN agreements, we need to ensure that we are able to prove the rules of origin. We are able to prove that formula that yes, the actual origination has happened from China. So wherein the value addition, the amount of cost, what all processes the China country has been applied on that product in China vis-a-vis when it was being moved from US to China becomes of utmost importance. Whenever we are filing an application with the customs to prove that yes, the origination is China and not US. Moving on to the new scheme, which government has just recently on 17th of August 21 has come out with the remission of duties and taxes on imported good products. To give you a brief background, due to that case which India has lost in the WTO, wherein MEIS was one of the benefits or incentives which government is offering to the exporters in India. The government has come out with this scheme and has discontinued MEIS scheme from 31st of December 2020. Under the ROTTEP, the major objective is that it allows reimbursement of inbuilt taxes, levies, central, state, local, mandi taxes, your other VAT, CST, and all those taxes which you pay on fuel, etc. Gets refunded to an exporter. So what is the mechanism of ROTTEP? So currently, under the ROTTEP, it's been provided in form of an online script as a rebate of a percentage of freight on board value of an export, with a percentage ranging from 0.5 to 2%. For industry like electronic goods, it's majorly the range is around 0.8% of the FOB value. There's one of the requirement, the government is yet to come out with a detailed scheme in how to procedurally go for the ROTTEP. But in Jan-Feb, they come out with a notification wherein they ask the assessees that if you intend to claim any benefit under ROTTEP, that from 1st January 2021, whatever shipping bills you are filing for export of goods, the details, your intent, your declaration to claim benefit under the ROTTEP should clearly be mentioned. Hence, I'll really request my colleagues here that whoever have not been mentioning the ROTTEP benefit and they know that they are falling under now because the government has come out with a list of products along with the applicable rates, should just analyze and obviously try to ensure that in the shipping bills they are clearly mentioning it and declaring that they intend to claim the ROTTEP with the government. So whenever the detailed procedural aspects will be out, the same will become due to you from the government. Some of the ineligible categories under the ROTTEPs are advance authorization holders, team exporters, EOUs, and products which are subject to minimum export duty and etc. In the current notification, the government has clearly mentioned that 2-3 aspects. One aspect is that assessees who are into advance authorization regime, who are claiming benefit under that and EOU, they will decide later on whether they will include them for ROTTEP or not. Another aspect they have come out is said that they will come out with a budgetary outlay along with the sector-wise budget outlay in further communication to the industry at large, that how they want to spell out or pay out ROTTEP to the various industries. One of the other aspects when I was talking and touching upon on the shipping bill is that in case there is a shipping bill which have been filed and there is no declaration being made about the ROTTEP, it becomes important for us to ensure that we try not to do that, because then any changes in the EGM, once it flows to the EGM, becomes difficult. So hence, I'll really request us to our members to ensure that in all our shipping bills we are mentioning it clearly. One of the benefits of the ROTTEP is that currently they have come out that the refund can only be used for making payment towards the BCD on imported goods. And it is not to be used against payment of any IGST or SWS. So hence, whenever if any company is coming out or doing any calculation for what all benefits they can make use this ROTTEP of. So be mindful that it can only be utilized towards the BCD and not towards the IGST or SWS payment made towards the imported goods. The second and the last topic under the second section is on the duty drawback. I'm sure that most of you would be aware of that the duty drawback, the government has been long been there. It's of two types. One is the all industry rate, wherein there is a list of products against which government has come out with a percentage of duty drawback which a company can claim as a percentage of the FOB value of an exports. It can range from percentage to percentage depending on the product rate, and also with a limit depending on the capping per piece, etc., depending on how they have spelled out in the list and schedule for the DBK. Another is a brand rate fixation. So brand rate fixation is something wherein a company can go and file an application with the government wherein they feel that the AR rates which have been fixed, or in cases wherein AR rates have not been fixed for that product, but they have inbuilt taxes which they have been paying and getting embedded and borne as a part of the exported goods. And they can get the brand rate fixated from the government. Some of the conditions which are there under the duty drawback is that though goods on which we are claiming the duty drawback is those imported goods should be used in the manufacturing of exported goods. So in case we are importing and because of some exemption, there is no BCD or IGST being paid, then there is no duty drawback which can be claimed. Similarly, whenever we are going for a duty drawback, we need to ensure that we are receiving the sales proceed within the time allowed under the FEMA or RBI guidelines, except whenever if it's a sale to an SEZ. One of the beauty of the duty drawback is that, as we have been talking in the previous slide, in advance authorization or EPCG, there is a requirement to meet a particular threshold of an export obligation. But in duty drawback, there is no such condition. It's just that the goods which have been imported, you have paid duty on that and they have been used for exporting goods. And accordingly, we can claim the DBK by filing our intent in a shipping bills. Also, the DBK is paid in cash to the assessees. One of the things which is of important whenever we are going for a DBK is that no DBK is allowed if we are exporting goods against discharge of an export obligation, which is towards the advance authorization or EPCG. Again, clearing a point that whenever we are doing a multiplicity of exports under different schemes, we need to maintain a different register so as to be clear that on which exports we need to go for DBK, which export is for advance authorization, and which export is for the EPCG scheme. Similarly, DBK is something which cannot be claimed on export of finished goods, which is being covered under the mover. So if you have opted for mover, duty drawback cannot be claimed. Similarly, if we have paid custom duty, IGST, BCD, we need to ensure that we haven't claimed any central credit of those custom duty if we are opting for a duty drawback. From procedural aspects, some of the pointers which is of importance for us to be mindful of is that the export value, whenever we are going for a duty drawback, should be more than the value of imported goods. In case it is lesser than the duty drawback will not be applicable to you. Similarly, the DBK, the drawback amount or rate should not exceed the 1/3 of a market price of export goods, because if it exceeds, then the balance claim shall not be payable to you. Similarly, in case of an IRF, because right now it's all electronic system wherein we file a shipping where it gets updated into the EGM and then it flows to the ISK. If we are going for a duty drawback, we need to ensure specifically in case of a non-industry rate that the export realization post-exports should get updated in the system so that the drawback is not getting blocked or do not get delayed. So realization of exports within time is important to claim any benefit. Secondly, obviously, to ensure that we do not falter any mechanism or any procedure which has been set by the RBI. Similarly, if the final goods have been used in India before exportation, then also no DBK is applicable to us. So we need to ensure that whenever we are exporting, it is not put to use in India, and also it is not a transshipped goods. For example, we imported, it just moved through India, and then we have just exported out of China. There has to be something done in India. It should not be a mere transshipment of goods. Similarly, we should avoid any kind of a misclassification or misdeclaration in case of a HSN code. Because as we know, there is a schedule, there is an HSN allocated to her. Any minor mistake might lead us to denial of DBK from the custom authorities. Similarly, there's an issue which we have seen the companies have been facing. What about those cases wherein there are 3-4 inputs which we have used? 2 inputs which we have used imported, no duty payable, but one of the inputs which forms about 5% of the total manufacturing cost, duty has been paid. So will DBK be allowed in those cases? So this is a contentious and the litigated issue. But there have been a past circular 2003 which have been issued by the government on this aspect, and there have been various case laws also in this favor, wherein if there's a part payments also, a part good, if you have used 3 goods and paid taxes on 1. So in case of an AER rate, the courts have held that it is not up to the custom authorities to look into what and how much quantum of custom duty have been paid at the end. And accordingly, DBK at the rate as prescribed therein should be allowed. But obviously, needless to say, there have been certain contrary judgments as well. So we really have to be mindful that whenever we are going for a DBK, that what all risk we are carrying and how much of quantum of import duty we have paid. Because the lesser the import duty we have paid, there are chances that at custom authorities, we might face an issue. Moving on to the third and the last section of today's session on GST audit and investigation. I would just like to give you a brief about what has happened and what all changes have happened under the GST. There's a whole guideline and a procedural document which government has issued to the internal departments for audit purposes. As a general practice, the authority should be giving you a 15 days prior notice, and audit should be completed within 3 months. And within that 3 months time period, the site visits along with any findings as there will be has to be communicated to the assessees. Similarly, there's like in central excise and service tax erstwhile also there will be provisions. In GST also they have come out with a special audit provisions wherein with the prior approval of a commissioner, if they want, they can appoint a third party, independent party CA or a CMA to do a special audit for the assessees. Under GST, I'm sure you must have heard a lot of news about fake invoices. So keeping in mind, there have been a lot of fake invoices in circulation, which has led to a lot of revenue loss to the government. They have also set up a DGARM with a link to ensure that whatever information a assessee is filing in GST returns is in sync with the details that has been filed into the other legislation also, whether it is ISCADE, whether it is income tax. So there's a separate risk management wing which they have set up, which keeps an eye and provides their insight to the respective audit divisions and the jurisdiction officers, places which list of audit assessees on which audit is to be conducted is being released and internally being circulated within the authorities. Some of the major key issues which we have seen the state authorities or the central authorities have been doing over the period of time, and where we have seen that the industries or the companies have been struggling, especially the service industry, is on the mismatch in the turnover at the GST return versus financial and GST level wise. Specifically, if I talk about the software licensing companies, there could be a scenario that you have been issuing invoices from various units and everything. Although the output register would be maintained state level wise, but the input register might not be maintained in that particular format. So there have been cases wherein the department comes and as per the requirement of the law, they ask for a state-wise trading account. But the companies have not been able to do that because they don't have a state-wise bifurcation of expenses. Output would be there, but the expenses details will not be there because it is something which is booked at the headquarter or a main registration level basis. Similarly, there have been cases wherein related party transactions, although it's been like 4th year of a GST, but still we have seen that whenever there's a reconciliation, invoice level reconciliations being done from the financial statement towards the what has been done for the GST return purpose, there have been gaps. Because many a times we have seen that the companies have been doing those reconciliations on total basis rather than going on an invoice level reconciliations. And at times there have been cases wherein at certain invoices, the GSTs have been missed to be paid, especially in case of a related party transaction, because the liability in such cases is become due basis the accounting entry, but not basis whether you have made the payment to the vendor or not. Hence, it is of very, very important that we maintain our invoice-wise reconciliation, not only for our output, but also for our expense side or a related party, specifically a related party transaction. So as to ensure that at the time of audit or a GST investigation, we are not struggling with any kind of a data. Similarly, as we know that when the GST was introduced, e-way bill was introduced later on, and now e-invoicing was being introduced from October 19 onwards. There have been dearth of reconciliations or lack of knowledge that currently, although assessors have been doing 1 versus 3B reconciliation because of the GST audit and annual return filings, they have been doing year on year. But currently, we have seen clients not been doing the similar parallel reconciliation between the e-way bills and the e-invoicing. So it is important that we do those reconciliation as well, so as to ensure that we are not missing out on any aspects which might lead to unnecessary tax payments or an interest implication at a later audit stage. So I think this was some of the pointers which we wanted to share, wherein we wanted to talk about the records, the pointer, the issues, the things we should be mindful of, along with the basic features which have been introduced under ROTEV, DBK or Carta or a Mover scheme. So that's all from our side here. So I think happy to take on the questions. Kunal, anything you want to add?
Thank you so much, Akansha. Yeah, I just wanted to say if Kunal want to add something. You covered well. I think you covered entire domain of the concerns, and I'm sure that the members would have got a lot of their queries resolved and a lot of new information with your presentation. In the meantime, I would also request members to post their questions, if any, on the chat board. Or feel free to ask any question. Okay, I'm seeing one question. Uday Manjal. Yeah, Kunal, do you want to add something?
Now, I want to ask one question.
Okay, please go ahead.
Is there a threshold below which this is not applicable? For example, the soft tech.
So currently, sir, we haven't seen that kind of a thing wherein there is a threshold and below which this will be applicable. So it's for all units who are engaged into export of software. So this is driven by the RBI guidelines, basis which we need to do it. And STPI and SEZ authorities are a mere mechanism which facilitate that certification. Because these are because each state or have their own STPI board, so it becomes easy for compliance perspective and control perspective. That's where they have given powers for them to do the certification, but there's no threshold or something which is there.
So you are saying even if it is $1 export of the software, soft tech is applicable. Am I correct?
Yes, 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 yes.
Sure. I'm just seeing one question. Mr. V. Sagar, do you want to have any other query?
No, I just asked that. My
Okay.
question. I've asked my question.
Mr. Uday Manjal, this is not applicable for service units. Is this the question? Mr. Uday Manjal, can you unmute and ask the question directly? In the meantime, Akansha, I have a few member companies who have not been filing the softwares, although they have exported software services, and also got the remittance. And in fact, this is what I would say that they were not aware and they have been doing this. So, is there any provision where condonation of delay is possible?
Yes, yes.
No?
Yes, sir. There's a combination which is being possible. We'll have to file it. We'll have to reach out to the respective STPI authorities wherein, so first and foremost, we need to approach to get a non-STPI registration done. And to get this regularized for the past exports also, we need to, we can file a condemnation with them and the RBI. So as to ensure, because the realization is there, it's just that the respective filing has not been made for the softwares. So Kunal, there's a question on, there have been certain companies who are into DTA, but they were not aware of the Softex filing. So they have realized they have made an export. So I was just suggesting to them, there's a process for condemnation which they can apply for that. And right now they should regularize that and go for a non-STPI registration.
And we've seen authorities condoning, because the law was not very clear, so they are okay condoning the delay.
So in this case, the authority would be STPI only?
Yes.
Yeah. So for all DTA units, they need to have the registration with the respective STPI and then do the filing. In case they have not done the filing, they can do the registration now and request for condonation of delay. That will be considered sympathetically. Is this the gist, right? So
Yeah.
this gets resolved. Thank you so much. And another question coming from Mr. MS Prasad Bhatt, whether unit registered in free trade warehousing zone needs GST registration?
Yes, I mean, I'm assuming that it's FTWZ is nothing but a SEZ, a part of an SEZ only. So if we see the GST law, it says that even a SEZ is required to be registered under there. So with that logic, yes, FTWZ should also be required to be registered under the GST. And obviously, if they would be claiming export benefits, so that needs to be reported under GST as well.
Okay, thank you. One from Mr. T. Krishna. In GST audit, whether e-way bill versus e-invoice reconciliation is insisted?
Yes, sir. So e-way bill, it's been a time being introduced. If I'm not wrong, it was being introduced to somewhere around 2018, mid of 2018. And e-invoicing is something which has been introduced from October 19 for 500 CR and for 100 CR onwards from January 21. So yes, this is something new, e-invoicing and something. Even the department is learning, but I'm sure if not even audit, right now also if you're doing a GST return filing, the e-invoice versus your books reconciliation, any which has to be done. So that reconciliation will always be there. And in fact, even in time of filing return, the e-way bill tab also appears for a SSE to download and see that how much of details either they have responded to the others or someone else has shown to against sales to them. So I would really request as a proper compliance to be proper compliant that we should keep a tab, because if not else, there have been times that certain additional details have been shown against our GST by mistake by certain vendors. And then it creates an issue at a later stage to prove.
Thank you. That clears it well. Yeah. One coming from Mr. Sunil, what can the benefit from ROTAP be mentioned similar to MEIS or duty drawback? So are you trying to say the ROTAP benefit is similar to MEIS and duty drawback? Is what your question, Mr. Sunil? I believe so. So, Kanksha, would you like to answer this question? Probably his question is ROTAP. Is ROTAP similar to MEIS?
So it is a little different in the sense that MEIS would have a more higher percentage. In ROTAP, it's a little lower. But yes, to say that ROTAP has replaced MEIS, yes. So ROTAP has been introduced in place of an MEIS. MEIS have been discontinued from December 20 onwards, and from 1st January 21, the ROTAP had been introduced. DBK is a separate scheme altogether, and it will run parallelly to ROTAP.
So I think just to answer, SOTEP essentially is a reimbursement of state taxes. So it has come in place of MEIS, but it has a lot more restrictions as compared to MEIS. There are a lot of categories of exporters who are not eligible for ROTEP, but who are eligible for MEIS, for example, an SEZ unit or a custom bonded warehouse, etc. So yes, it is in place, but it has a lot of extra restrictions and lower percentage.
Thank
So
you.
the question is, when can it be monetized?
It'll be similar. So what they will do is they will create an electronic ledger, customs ledger for every SSE who's getting the ROTEP, and this can be electronically transferred. So it can be monetized as and when you go. By monetized, it can be sold across, transferred.
Yeah, exactly.
And if it is to be used, then in that case, it can only be used for basic customs duty and not for the full amount.
Yeah, because in the IceGate portal, it is only appearing. Nothing is enabled, even though you ledger, it is not appearing. So that's why I asked: is there any timeline that has been issued by the department?
So I think the systems are still under development. I think maybe another month or two, I think it'll start happening. I think they were struggling with the scheme first. I think they've come out, I think.
Yeah. And also in the RODTP amounts are appearing. I think those are dummy amounts as per the customs. Like if you see the BBK amount, as well as the RODTP amount is appearing in the shipping bills. So they say it is a nominal amount. It is not the actual amount. So will it be applicable with retrospective effect from 1st Jan, or will it be with the current date?
It will be applicable from retrospective 1st to January.
1st Jan. Okay. Okay.
And provided, just to add to that, provided in your shipping bill, you have shown that intent that you want to claim for ROTAP.
Yeah, correct. We have given.
Yes.
Sir, one more question. Whether GST is required for units registered under free trade warehousing zone?
Yes,
In
sir.
fact, Mr. Shah did not hear it. Yeah, please answer, Kanksha, again.
Yeah, so an Indian company who is holding a FTWZ license or a unit, they will be required, like an SEZ. So under GST, SEZ units are required to be registered. So similarly, in FTWZ, akin to SEZ shall also be required to be registered.
So, and I think the reason for this is primarily because you will take a lot of GST exemptions, and the authorities want to give exemptions to only registered people. So I think primarily for the purpose of claiming GST exemptions, you will need to be registered. Sorry, sir, you're on mute.
Yeah.
Mr. Krishna, you have a follow-up question. I mean, you have a secondary question. Would you like to ask about the SEZ again? Okay,
Yes, sir.
Yeah, please go ahead.
So in exports, if we build to a foreign country and ship to SEZ unit in India, then how it will be reflected in EDPMS to square off our inward remittances received from the foreign customer?
So I think we're not. So I think we'll answer this question.
I mean, can it be done like you are billing to a foreign country and shipping to SEZ in India?
Yes, sir. Yes, sir.
Okay. How will it be reflected in EDPMS to square off inward remittance received from foreign customer?
The same foreign customer which we have billed.
Billed to.
Yeah.
But supplies have been made in SEZ in India.
Yes, yes.
So, sorry, we probably may not be able to answer this question.
Answer. All right. So we'll try to get this question answered, Mr. Krishna, separately. Any other question?
No, sir. No, sir.
Any member would like to ask any question, please feel free. We are almost at end of the time. Any last question from any member? So with this, I believe that none of the questions, your presentation was self-explanatory. Most of the issues were resolved, and some of the issues, if taken by our members, we'll take offline with you, Mr. Kunal and Ms. Akanksha. With this, I would request Mr. V. Sagar to propose a vote of thanks.
Good evening. Sandeep Nerula, Chairman ESC, Mr. Kunal Chaudhary, Partner ENY, Mrs. Akanksha Jain, Director ENY, and Gurmeet Singh, Executive Director ESC. Under the dynamic leadership of our chairman, we have set up this knowledge sharing series, and today was the second of the knowledge sharing series. I have a very pleasant task of proposing a vote of thanks to the speakers for continuing to do such a good job with us. Hence, you all would agree that we had a highly informative and absorbing session. Our friends from ENY presented before us a detailed picture of various issues related to customs, exempt procedures and incentives, soft tax, as well as GST audit and investigations. Procedural issues concerning exports have indeed been taking away a lot of our time of the exporters, which we can't afford because most of us do not have the spare time to do this. I'm sure after today's session, we all would be feeling wiser and would be in a better position to tackle many of those problems. Let me express my sincere thanks, and on behalf of ESC, our thanks to Mr. Kunal Chaudhary, Partner ENY, and Mrs. Akanksha Jain, Director ENY, for this wonderful presentation made by them. Thank you very much indeed. Thanks also due to the delegates who have joined the session today in large numbers. It's only with your active participation that the sessions today were so good. Let me also thank the councils and council's secretariat for arranging sessions. They have been doing a wonderful job on this learning series. I sincerely hope that the partnership between ENY and ESC grows in the days to come that may benefit the industry. With these words, I once again thank all of you, and I wish to close the session. Thank you.
Thank you. Thank you, Kunal. Thank you, Akanksha. Namaskar.
Thank you. Thank you.
Thanks a lot, everyone. Have a nice day. Thank you.
Bye. You too.